Well, we've got the drama you were just talking about as you set us up for this. 206,000 jobs created in the month of June. That is much higher than the 190 anticipated. We talked just before the data came out about potential surprises. The unemployment rate is another surprise. It rises to 4.1% from 4%. The forecast was only for 4%. So we've got a difference there. Interesting number for the 2-month net payroll revision. We'll see which months it came out in, but down 111,000. So on the one hand, we get stronger growth in this month, and the 2 prior months, we get a significant drop there. So you put it together, you probably have a slowing economy story. 0.3 for average hourly earnings as forecast, 3.9% on a year-over-year basis. No change in hours worked, 34.3. The labor force participation rate, 62.6, goes up from the prior month, and 7.4% for the U6 number, the underemployment number, as they like to call it. Let me just take a very quick look here at the number of people who were reported hired in the household survey, 116,000 plus. So it's lower than the establishment survey, but we don't have that big gap that we saw last month. The Fed has a reaction function for this. The markets have an overreaction function for this. The narrative is going to be that this is a sign of a slowing economy. We saw this big revision down in the March and April, or the April and May numbers. April revised down by 57,000. May revised down by 54,000. Very significant numbers. So the overall pace of job creation has slowed, even though this month is higher at 206. There's a good chance it'll be revised down as well. And now unemployment climbing a little bit faster than the Fed expected. They said we would be at 4.1% at the end of the year. We're at 4.1% now. Not triggering the SOM rule, but it does show a slowdown. And then that becomes the question that the Fed has to decide as they try to put together the Picasso that that Randy Krasner was talking about. Is this the slowdown they wanted, or is this a sign that the economy is in trouble? And I think on a slow trading day with not a lot of volume, it's gonna look more like a panic type situation, slowdown. But overall, it just kind of gives you the impression that we are where the Fed sort of expected to be.